Welcome to Market Watch. With the world in recovery and inflation starting to rise, where does the money flow? With me to discuss that, I have PiFund's CEO and founder, Mike Taylor. Hi, Mike.
Hi, Liam. How are you?
Well, look, we've had a sort of a fascinating month of movement in terms of expectations around inflation. That's seen markets become a little rocky, and some investment categories, cryptocurrencies especially, extremely rocky. We've seen this incredible Bitcoin crash, 50% coming out of that in just a few days. What do you make of all that?
Well, if we look at the Bitcoin sort of crash, first off, is that there are two reasons why it's been collapsing. The first is that really there's been a clampdown on from a regulatory perspective for cryptos. And so what that's meant is that with tighter regulation, there is the fear, I guess, amongst crypto investors, first of all, that it can no longer be used as a default for criminal activity. Obviously, it's one of the first things people ask for with cybercrime is to be paid in Bitcoin. And the other reason about that is because markets have become slightly concerned about inflation, potentially an asset bubble as well, which could be pricked by higher rates. Bitcoin has been used as certainly as a speculative asset, and as we're reining in some of that speculation, then some of the what you might call hot money is coming out of assets like Bitcoin and other cryptos.
Sure. I mean, I've heard Bitcoin and other cryptocurrencies described as sort of akin to gold as a speculative asset. They certainly aren't really currencies, not to any practical sense. But I guess they it's pretty volatile, but they hold value and they go up and down. So is that how you view it as an investment class?
I do not consider personally that cryptocurrencies are investment grade. If you look at the commodities and other types of assets that have used as an inflation hedge, they have a secondary use. Gold, for example, has a secondary use. I don't think we can consider that criminal activity as a secondary use for cryptocurrencies as an asset. And as we've talked about before, I just don't see a world where that central banks and governments are going to allow those types of currencies to be adopted formally. They will just use their own digital version of their own currencies. So for me, Bitcoin is just pure speculation.
And then, as you say, more regulation coming their way, and even some of the champions there sort of starting to see the issues they have with the environmental side effects of mining the stuff. Elon Musk, just some comments around that really, actually almost sparking the kind of crash or playing into it.
Yeah, he loves to tweet about cryptocurrencies. He's often called the Dodge father or the dog father for his support of Dogecoin. And he recently tweeted that Tesla would no longer be accepting Bitcoin as payment for their cars, which was obviously bad news for them. But the reason that was cited is for the ESG concerns, because Bitcoin mining is said to use as much energy as a country like Argentina.
Yeah, which growing exponentially. It's just hard to see with the all the concern about global warming, how to see that could end well for the the whole lot of it, really. Look, but just to jump back a bit, that kind of huge volatility that we've seen, and a lot of money has still poured into Bitcoin, and the fact that we're seeing a COVID recovery around the world, as inflation comes back, fears around interest rates rising come back. So that, as we talked about last time, actually has seen Wall Street tracking a bit more sideways. Certainly the New Zealand market, the NZX 50, has tracked sideways or in fact dropped. It does beg the question, where does money go right now? Where do you see the bulk of investment money flowing in the next short period?
Yes, you're right. So money has come out of the NZX, and money has also, that may have been stock specific, obviously, with A2 as an example, which was the index. But some money has come out of the sectors which were quite hot at the end of 2020. And some of that includes the high-flying tech recovery names that were beneficiaries of COVID. There was also a flow of money into renewables, which did see our New Zealand electricity retailers benefit from that. And then part of that money has sort of cycled back out. So that's a specific example for the NZX and maybe for the NASDAQ. I think investors at this moment need to look at what are the sort of growth assumptions of the underlying investments that they're looking at. And when we look around the world for value, we see much more value in countries in Asia and emerging markets, but specifically in Europe at the moment, because European economic growth and economic sentiment is probably about as good as it gets. They've actually staged quite a rapid recovery this year from the pandemic. So from a couple of months ago, sitting at around 3% in terms of vaccinations, Europe's now broadly at about 40% of people who have had their first vaccination. I was talking to someone in France last night who said that they just turned up to the Stade de France, literally with tens of thousands of people, walked in, had a jab and walked out, a minute later. So things are changing, things are improving there. And I think from an investment perspective, that's probably a good place to look.
So when you're looking at that, because obviously, there's a big economic recovery and a boom expected in the US as well, but there's a fear there that the US Fed will spoil the party by starting to lift rates. In New Zealand, where we've got the Reserve Bank talking about lifting rates next year. Do you feel that Europe is like the ECB is likely to be a bit more cautious?
Yes, I mean, the ECB's had a problem for a number of years with actually deflation, not inflation. So I suspect that they'll want to see the results, or they'll want to see inflation in their market before they start to raise rates. Comments out in the last couple of days confirm this view. Obviously, RBNZ going completely the other way, more hawkish, and sort of they're almost out on a limb at the moment with their view. And Fed, well, if there is inflation, it's just a question of a game of chicken, really, is how long they can hold off before they need to raise rates. So of all the countries and regions around the world, probably Europe will be the last, which does bode well for their market.
Just finally, I mean, a lot of this is predicated on what's being seen as quite a big bet, in terms of whether or not the conditions that are driving inflation are temporary, whether these bigger factors of, the technology, the internet, and the price discovery that brings will be more powerful. They've been deflationary for the past 10 years. How do you see it? It's a difficult one to pick, but do you think inflation will start to spiral up?
Personally, I think no. There are two forces at play here. You've got the traditional or the deflationary forces that we've had, I guess, since automation and the internet, which continue to drive prices down. I bought a brand new TV the other day, it cost me $450.
Yeah.
I was surprised how cheap it is. Yet, if you want to do some renovation at the moment, obviously the cost of timber and the cost of tradespeople has gone up. But I think a lot of the things that are causing the short-term price inflation should be transitory once the world manufacturing is sort of turned back on. And as we know from an economic perspective, is that once prices rise, supply always responds to that. So this is really more about supply constraints as opposed to demand. So I would expect that, from my perspective, is that the inflationary concerns will abate next year, and the deflationary forces from automation will continue. The amount of capex from software businesses at the moment is significant, and that's all going to be deflationary, having a deflationary effect on the global economy.
That's great, Mike. We'll leave it there. We'll see how the markets unfold for the next month. Thanks for being with us. Cheers.
Thanks.